Risk disclaimer.
Good morning, good afternoon, good evening, depends on where you are connected from. My name is Emmanuel Adigbola, popularly known as the Forex Apostle, and I want to welcome you to today's training where we will be looking into what I call the Easy Peasy FX trading strategy. Easy Peasy. Why is it Easy Peasy? Because it's a no-brainer. It's very easy to understand. And when we talk about strategies, in Forex trading, you have different strategies, just like a mechanic. You know, a mechanic, when you go to a mechanic shop, you know, they will have different tools, like a spanner, like a screwdriver, like different stuff, which they use to, you know, to do different tasks. So the same thing also in Forex. The same thing in Forex. Even though we encourage that you stick to one strategy, stick to just one system, get used to it, understand it in and out. But sometimes also you want to test other strategies because you don't know which one you're going to like most. So, and that is why we want to look into the Easy Peasy strategy today. So once again, I want to welcome all of you. It's going to be a quick training because I know most of you are very busy, but at the same time, I promise I'm going to give you value that qualifies for your time. So let's get started. Looking into this strategy, it has to do with moving average. It has to do with moving average, and not just ordinary moving average. It has to do with a moving average crossover. So, and when we talk about moving average crossover, we have different types. We have, it depends on your strategy, depends on what to trade, depends on the time frame you trade. But these ones, we are going to be making use of 4 moving averages. Okay, we're going to be making use of 4 different moving averages. But let me rewind a little bit. What is a moving average? What is a moving average? Because that is, I mean, that is where we need to start from. Let's go back to our elementary arithmetic. So when you have 5 items, let's say for instance, you have 5, I have 6, I have let's say 15, I have 14, and I have let's say 10. Okay, if I want to find the average of this number, what it simply means is that I will add these 5 numbers together. So, and I will divide by 1, 2, 3, 4, 5. So I will divide by 5. So that will give me the average of this number. And when we add it together, I believe we will get 6 plus 14, 20 plus 15, 35, 40, 50. So we'll get 50 over 5. So it therefore means that the average of these 5 numbers will be 10. So the average of these 5 numbers will be 10. But what happens if we decide to change one of these numbers? So if we change this one to 95, you will see that it will affect these figures drastically. And that is one of the disadvantages when it comes to moving average, because at this time now, this one will be giving you like almost 150 over 5. So you'll be seeing the average to be around 100. Meanwhile, 4 out of the 5, they are actually less than 20. So, and that is why we have 4 different moving averages when it comes to trading. Now let's go online. Let's see what Investopedia actually how it defines a moving average. So when you go online and you type what is a moving average, this is what you will see in statistics. A moving average is a calculation used to analyze data points by creating a series of averages of different subsets of the full data set. That is what I just explained. Now, when it comes to Forex trading, the average, like for instance now, let's say let me go to 1 hour chart. So on this chart, it doesn't matter which instrument. And what we are going to discuss, you can use it to trade any instrument. You can use it to trade Forex. You can use it to trade cryptocurrency. You can use it to trade stocks. So the average of, if I look into, let's say the past, let's come over here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So if I take 10, candlestick based on 1 hour, so that is 10 hours right there. So the close of each candle, remember that when we talk about candlestick, you have an open, you have high, you have close, and you have low of each for each candle. If you don't know how to get that, if you put your mouse on each of these, sometimes it will show it, sometimes it will show, it will display right here. Okay, sometimes it will display right there. So if I put my mouse right here, you will see the close of that one is 41,348.46. If I put my mouse on the second one, it's 41029.81. Can you guys see where I'm getting the close value? If you don't know how we get those value, the close, so can you identify that by typing 7, or you can, I believe you can talk right now. So you don't know how we get the value that we just talked about. Okay, so it's assumed everybody understands. So once you put your mouse on that candlestick, if you look right here, if you look, this is open, this high, this is low, and that is close. Do you see that? So that value right there, like this one, this is 41029.81. This one, that is 41225.60, and so on and so forth. So when you take all those values and you add it together and divide by the number of candles. So when we say, okay, we are dealing with a moving average to be 8, what we are simply saying is that we are taking 8 candlesticks. We are counting 8. So that would be 1, 2, 3, 4, 5, 6, 7, 8. So it means we are considering the average of the last 8 candles. So if you say, okay, we are dealing with a moving average to be 20, what we are doing indirectly is that we are counting the moving average for 20 candlesticks. Depends on the time frame you are working with. If you are working with 1 hour, so MA20 means that, okay, we are dealing with a moving average of 20 hours. Okay, so I believe everybody understand that. Then when you when we talk about moving average, we have 4 different types. So how do you add that to your chart? If you go to insert chart right there, so insert indicator right there, or you can go to insert, because some of you might not know. You go to insert, you see indicators, then you see trend, then you see moving average, but the shortcut is just come. You see that plus sign right there. So you click on that, you see moving average. Now, the 50 moving average that I put is the one that you see as white. The color is white. Now, if I go to simple, you will see that it will look different. So these are both 50 moving average, but one is exponential, one is simple. Do you see the difference? If I go over there again, let's change the color of this one. Let's change the color of this one to green. So this one is simple moving average. This one is exponential. If we go back there again and we change it to from simple, let's say smooth, let's change the color of this one to this color. So you see that the same 50 moving average, but because we have different types, then also over here, if you go over there, let's change this one to linear weighted and then change the color to red. So these 4 moving averages, they are all of them. They are 50 moving averages, but when you look at it very well, because of the type, it is different. So now this system that we're going to be discussing about, as I said, uses 4 different moving averages. 4 different moving averages. And the first one is 5 MA or 5 SMA, simple moving average. Let me clear all of this. So the first one is 5 simple moving average. The second one is 10 exponential moving average. The third one, which we call the filter, is 50 exponential moving average, and I'm going to explain all of them. And the last one is 100 exponential moving average. Now, why 5 simple moving average? Because it's the fastest. It's the fastest. And why 10 also is a fast moving average. So, and this 50 and 100, we call them the filter. So they are the one that we're going to be using, and we'll be adding them right now to our chart. Okay, everybody understand up to this point? Yes or no? If you don't understand up to where we are right now, type no on the chart window. If you don't understand up to right where we are right now, type no on the chart window. Okay, so it is assumed everybody understand up to this level. Okay, good. So now let's add them. I'm going to remove all of this one first. I'm going to remove all of this, and let's add the indicators now. So I will go to moving average. I'm going to be adding 5. I'm going to color it red, and I will make this one simple moving average, and I will use this weight size. So we have 5. You can see how that 5 followed the prices down. You can see how it followed the price. Yes, we need it like that. Now the second one is 10, but this is going to be exponential, and I'm going to change the color of this one to lime color, green, depends on you. So you can see that one. So this is 5 simple moving average. This is 10. Now, why do we need this 10? This 10 is going to be serving as our trailing stop or our bounce moving average. You're going to be explaining that as we go along. Now, the third one, which we will add, will be 50, and it's going to be exponential, apply to close also, and then we'll make this one color red, and I'm going to be changing the size to this. So something like that. And the last one. Now, why do you need to understand this, especially like if you are using MT5? Most of our systems that we have right now does not work with, or they don't work with MT5, and you still want to build a system around your MT5 so you can use this. So like this one is 100, it's still going to be exponential, and I will change the color of this one to lime, and we have this. So this is what we have right there. So we have a 5 simple moving average, we have 10 exponential, we have a 50, and we have 100. Now, these 5, this and this are used for our trade signal, the 5 and the 10. So this is for our trade signal, and this 50 and the 100, they are used to filter. Okay, to filter our trade, and I'm going to be explaining them. So you can discover that this 150, this 50 is for medium trend, this 100 is for long-term trend. Okay, and of course 5 and 10, they are for fast short-term trend, actually short-term trend, and that's why we have them like that. So we have 5, 10, 50, and 100. So you can save this. You can go ahead and save this. Call it whatever, but I call it Easy PC. And I'm going to be explaining why I call it Easy PC FX, because it's a no-brainer, as I said. So this is it here. Now, what is the rules? Remember our CE. ST. Remember, you can apply this to any system. So the C is the condition. The E is our entry. What must have to happen for us to enter? The S is our stop loss. Where do we put our stop loss? And the T is our target, the profit target. So you need to understand how to use this based on this. Remember, any system at all, just always remember this CEST also, it will help you. So that way, because you are creating a route, okay, you are creating a set of rules that you trade with. So let's come over here. So what is the rule? For you to look into buying, okay, for us to buy, number one, the five simple MA must be above the 10, the 50, and the 100. Now, for us to sell, the 5 simple moving average must be below the 10, the 50, and the 100, and it must follow each other. Do you guys understand that? Yes or no? Do you understand that? Yes or no? If you don't understand what I mean by this, just type no on the chat window. If you don't understand what this rule means, to buy, what you're looking forward to buy, or the route for sale. So this is our condition. If you don't understand what that means, can you type no on the chat window? Let me see. Okay, Bishop say, oh, Bishop, longest time. How are you? Longest time. I thought you've graduated. Okay, so now we have that. Let's come over here. Let me scroll back down. So let's look for buying opportunity. So for you to buy, okay, what we are saying is that this red must be above this, and this green must be above this, and this must be above. So you are looking for a setup like this. So, and if the price, the candlestick must come, touch the 10, and bounces back. So once it bounces back and close above the red, then you are looking forward for buying opportunity. Let me explain. Let me repeat again. So for the buying signal, you have this setup like this. So this is our 100 EMA. This is our 50 EMA. This is our 10 EMA, and this is the 5 SMA. You can see how it line up. So the candlestick must come, touch the 10, and bounces back. So once you have that, when the candle closes, you can go long. Where do you put your stop loss? Your stop loss can go below that candlestick or go below the lowest low before that entry. By now, you guys understand what I mean by lowest low. If you are going up, this is highest high, high low, high high, high low, like this. So if I'm entering a buy in this place, so this is my lowest low before this entry, and my stop loss can come below right there. So for instance, if I'm buying right here, so this point right there is my lowest low before this, so my stop loss can come below there. Do we guys understand? Then you can now measure your pips from here to this, and just target that as your take profit. You can do 1 to 1, you can do 1 to 2, you can do 1 to 3, depends on the setup. Do you guys understand that? Yes or no? Yes or no? Yes or no? Do you guys understand that? Yes or no? I need yes, I need a yes, I need a no. If you don't understand, so that I want to order, I have the system for you that you don't have to be adding all of this manually, but I want you to understand how we get it, how we created it. Okay, let me see. Okay, cool. Okay, great. So that is how we go long. Now let's look for the short. How do we sell? How do we sell? You have something like this. So like in this situation now, right here, you don't do anything because it doesn't congruent with each other. You can see how it crosses with each other. Now, the only disadvantage of this system is that it could be lagging. And you know that when it comes to moving average crossover, that's why I don't trade it myself, because it could lag. But if you can wait for the proper setup, then you will enjoy it. So for instance, in this situation now, you will not place any trade up to around this place. Now we have our 100, we have the 50, we have the 10, and we have the 5. So where do we get the signal? So we get the signal from, not from here, but we get the signal from this place. You see, it come low, it pull back, they're right there. So at this particular place, this is where you will place your entry. So here, so you place your entry after the close of that red candle. So once you place your sell, you place this short right there, the stop loss can come right above there. Or if you want to play it safe, you look for the highest high before your entry. So in this case now, this is the highest high before the entry. So my stop loss can come right above there. So what you can now do, you can measure this from here to here. You can do 1 to 1, 1 to 2, and you can see that right there you get your take profit. So this is the system in a nutshell. Now let's quickly take a look at some of the examples. Then I will now introduce you to the ones that I have that I built for you. So let me scroll back here. So like in this situation here, so what will you do in this situation here? I want somebody to tell me, what will you do in this situation right here? This is a BTC USD, so and you can use this with any time frame. But what will you do in this situation right here? Anybody? Anybody? So like in this case now, you will not do anything because it doesn't congruence. Now in this place, when you get to this place, you can see this is 100, this is the 50, this is the 10, and this is 5. So what you are looking for, you can place your trade in with this red one right there, and stop loss come right there. But to play it safe, you wait. So like this situation now, let me zoom it bigger. So in this situation, we wait, this candle come back, it touches the 10 and it closes below the 5. At that particular time, you can now enter your trade and the stop loss can come right above that candle that closes, or the highest high. In this case now we are selling, so you're looking for highest high before that candle, so it will come right over there. And you can now measure this Bitcoin, but this can go with any system, So like let's take a look at, let's say like indices. Let's look for indices. Let me just pull out NASDAQ. So I'm going to go to 15 minutes on NASDAQ. I'm going to, okay, so the same thing. Remember, we have already saved it. So I just go to chart, template, and this is where we have it. So like right there. So if you look at this, how do you place this trade? So like in this situation here, you won't do anything because it doesn't congruent with each other. And once you have this, now you have, this is the 100, this is the 50, this is the 10, and this is the 5. So which candle actually give us that our trade? The candle that give us that trade, if we zoom out very well, the candle that give us a trade is actually, when you look at it, this one does not touch this. So in this situation, you still don't do anything. You still don't do anything right here. You still don't do anything because it's a very volatile market. This one here, you don't do anything. Now, where we actually put in our order will be this one. This one touches this, it touches 10, and it closes. Actually, it didn't even close above. So this is the one. So this one touches 10 and it closes above this. So our entry will be right there above that, and the stop loss will be right below this one, or if you want to play it safe, this is the lowest low. Before that, you know, we have highest high right there. We have highest high, lower low, highest high, lower low, highest high. So this is where you will have your stop loss, and the entry comes right here. So if you measure, remember that Forex is all about waiting game. It's all about waiting game. You wait for proper setup. If you measure that, let's see. If you measure from here, that's like a 685. If you go up there, you can see. If you want to do one-to-one, this is where you will have your take profit, and it definitely get it. Now, sometimes it will look as if, oh my God, I'm missing trade. Yes, it's okay to miss a trade than to enter a trade and you lost the trade. So like in this situation, I don't know how many of you have followed the market for the past few weeks. It's been very volatile. But if you have this in place, it will prevent you from entering trade at the wrong time. So like in this situation now, this is a breakout. If you understand good candlestick structure and patterns, yes, like in this case, you might say, oh, this is an engulfing candle. You enter your short and place a stop loss, and you can measure from here to here, and of course you get it. But in case you are not that confident and you see the market volatile, like right here, then you just wait for that proper setup. And where is the proper setup? That is where we have this. So this is the 100. This is our 50. This is our 10. This is our 5. So it comes down, retest, and right there, it touches this and it closes below this. So this is where you will enter your short position. And in this case, this is where your stop loss can be. You can't put stop loss right there. No. So your stop loss will be there. So if you measure from here over there, let's see how many pips is that. So the pips right there will be 8, 9, 10. Remember, this is a Bitcoin. So 8, 9, 10 will be somewhere right there, right there. And you can see that we actually goes beyond there. So this is the system. Any question before I introduce you to the EasyPeasy system itself, the one that I built? Any question? You can add this to any pairs. You can take any. You can go to any, let's say USD, USDJPY, any time frame at all, any time frame, and you have like USDJPY has been crazy for past few weeks, if not months. So let's say, okay, you don't know where to enter, you don't know where to go. So like right here, take a look at this. Jesus. Wow. So like if you had entered this kind of a trade, let's say you can see there, let me zoom it. So in this case, this is some 4 hours actually. So let's say you enter right there, because this is the candle. Let's see, this is the candle. This one is the one that gives us that signal. So right there, it touches, as you can see, it touches the 10 and it closes above this. So your stop loss, I mean, your entry comes somewhere right there. Your stop loss can come below there, or if you want to play it safe, it comes right there. Then you can measure from here to here, as we have said. If you look at that, of course, we get more than that. Then you see what happened again. It bounces back in this place. This is another opportunity. So in this place, you will still remain in the trend, because as long as you have the 150, you know that you are in uptrend, and you can see right there. This is another opportunity. You can add to your position right there, and your stop loss can come there. You can see now this one here. You don't stay close the trade except you want to. So like in this case now, you can see it comes back. It touches this again. and it closes above that. So if you are in this serious trade, you can add to that position, stop loss come there, and you continue. Like in this case, it comes again. So you can see how this system keep pushing and adding profit for you, because it never, so the time that you would have actually closed your trade would have been here, because it closes below this. So it closes below, so you would have possibly exit your trade right there, and you have another setup even right there, which I know many people would not have entered there, because it's just a parabolic. So in this case now, we are back to that trend. You see, like this, you will not enter any trade because it doesn't congruent with each other. So you wait. This is 100, this is 50. So you keep waiting. This does not close. This touch and close. So the entry would have been this. The entry would have been this one, and your stop loss would have come below right there. Okay, and of course, if you measure that, that's keep going. So this is the system very much. Let me see. Question: with this system, are we going to be using just one chart? You can create a profile. Okay, I just show you basically the system. But what I normally do is as a person, I normally have more than, I normally have few couples of charts open, because you don't want to be romancing just one chart. And it depends on the time frame you are using. If you are a scalper, if you are scalping, of course, you will not have time to be flipping from one chart to another. But if you are like like a swing trader, long-term trader that trade on 4 hours and trade on daily charts, yes, you can have many charts open, and by the time the market closes, you just flip from one chart to another to see where do you have a good setup, and you pick that trade. Like for instance, now this is on a daily. So on a daily, like in this place, you possibly wouldn't have done anything, because the market was just like, okay, up and down. You wouldn't have done anything. You wouldn't have done anything. So where you would have actually picked a trade will be this one on daily. Then you would have possibly put your enter there. Remember, the condition is okay, it lines up like that. And your stop loss would have come below here, or actually this. So, and if you do 1-to-1, you will still get your take profit. If you do 1-to-2, as you can see how it goes. So does that answer your question? Does that answer your question? Okay, good. So let me quickly, sorry, I meant one time frame. No, you don't have to use one time frame. As I said, you can do your analysis. When we talk about multiple time frame, it works with any system. Either you are using Tradermatic, EasyPC, FX Sniper. Before you place a trade on 15 minutes chart, you want to see, okay, what is going on 1 hour? What is going on somehow, maybe on 4 hours? The principle of multiple time frame applies to any system you are using. But then, if you can decide to still use one time frame, that doesn't mean that you are doing anything wrong. It's just that the risk is higher with that. Okay? So, you can also combine this system with other indicators that we have, like putting your MACD Pro just to filter or for further confirmation. So this is EasyPC FX. This is the indicator itself, and I have the template. Of course, you can add it with the counter, which I have. So if I'm going to be installing this, all I will do is copy. I will copy the EasyPC FX, the indicator. I will copy the Easy Forex counter, which most of you, if you are my student already, you already have that. MACD Pro, you already have that. Now, this news reporter is like having the news on your MT4, so that you will know when there's any news update coming. Sometimes it works, sometimes it still malfunction, but we grow it. Copy it. So copy that. Now, by now, I want to believe all of you know how to install indicators. Okay, so anytime you're using custom indicator, you go to file, open data folder. So open data folder MQL4. It doesn't work with MT5. Most of the tools doesn't work with MT5. You have this a different programming language entirely, and that is why I showed you how you can build it yourself on it manually. So now indicators, you come there and you right click and paste right there. So replace file in the destination. So I have that. Then I go back again to mine. Then I'll copy the template. So I go back to my MT4 file, open data folder. Now this time around template, then I will paste it right there. So now the reason why it's asking me to replace is because remember we already built one that we call FX Map Easy PC. So I'm still going to replace that. So now you close that. You can close your MT4, close the MT4, restart it, or just refresh. You can just refresh, right click on indicator, refresh, then go to your chart template. In this case, now we're going to be loading, load template. I will look for it, Easy Peasy FX. So this is it here. So it's going to ask you for the license key. So I'm going to copy the license key. Let me look for the license key that I have. So I copy my license key. I'll go back. Share. So I copy my license key and I drop it right there and I press enter. So this is because the USDJPY is closed. So let's go to over here. Let me load it on Bitcoin and see if it will work right. Okay, so it works right here. So you can see it right here. Now I had MACD Pro just to create a further confirmation whenever you are trading it. So you go to chart and save it back again. So Easy Peasy FX and save. Remember, you can add any other this thing though. Now this is where that today's news is supposed to show. You can see it. So if there's any news, it's going to show right there by your left side. Okay, let's say on Monday now, when there's news release, you're supposed to have the news. So it will just tell you, so you will know. Why do you have to worry about that? Because if there's any trade and you want to check, okay, what is going on the news, is there going to be any news release, especially if you are trading on the lower time frame. So this is it here. This is the settings. Okay, as you can see, now you can go back to the settings, go to indicators list, and you have the Easy Forex, Easy Peasy FX, and you edit right there. You can set your to give you signal anytime there is a crossover. So anytime there is crossover, you want to set it up such a way that the alerts will sound. The pop-up alert, you can set it up to true. Push notification, you can put it to true, and all of this you can set it to true. Now, show arrow here, you can put it to true. So whenever there is a trade opportunity, it will give you a signal. You will see a signal that, okay, now you can buy, now you can sell. Then there is something I want to show you, risk to reward ratio right here. I can use 1.0. So that would be 1:1 risk to reward ratio. If I use 3.0, that would be 1:3 risk to reward ratio. If I use 2, that would be 1:2 risk to reward ratio. Then I just say, okay. So once you have that, you have it like this. So if I go, let's say 1 minute, let's go to 1 minute. So it will be something like this. So as you can see the arrow, you see the arrow right there. It's telling you, okay, now you can buy after this. Now take a look. This, I put it on 1 minute because it's a BTC USD, and I want you to see that is the market is active. So you see that arrow. It's telling you, okay, if you're a scalper now, buy after that closes. Your stop loss comes below right there. You can see where it says buy stop loss. Because we are doing 1 to 2 risk to reward ratio, let's see where it gives us the take profit. So the take profit is right here. So you can set the take profit. So this is your price for take profit. This is your stop loss, and you just wait for the distance. Now remember, when you are trading on 1 minute, it's crazy. It's a crazy time frame to trade with in the first place. So anyway, but that is the system. If you use that 4 hours, it's the same thing. So you can use this with any. Let's come over here. So the same thing, you can see it here. So on daily, you have it here. On USDJPY, it tells you, okay, buy. You buy right there. After this candle closes, after the candle closes right there, you buy. You can move it a little bit up. Your stop loss right below. You see, it's put to the below. This is where you have your take profit. You can see it hits it right there. There's another signal right there. This is the take profit. And you don't have any other signal until here. So the disadvantage of setting your take profit is, like in this case now, you'll be, oh my God. So you can do trailing stop instead of doing the direct take profit, especially when the trend is strong. So like in this case again, you can see what happened. So it bounces, it closes above that. It tells you, okay, now you can buy. This is your stop loss. This is where you buy. And where do you have your take profit? So it therefore means that USDJPY is still up. So this is a system basically. And you can just look, okay, when they tell you, okay, buy, is my MACD above 0? Definitely it's above 0. So you look into that just to kind of balance it, that, okay, everything is okay. All right. So this is how you get it. And if you're my student, I believe you have access to this. If you don't have access to it, just send me a message. You get the download links and you can add it to your tool. And in case you are watching this and you are not one of our students and you want to lay your hand on this, well, just in case you are watching this on YouTube, the link to get Easy Peasy FX should be at the description right there. Click on it and it will give you access. God bless you. And let me take some questions. Any questions? I guess this is a bomb. Yeah, it's a bomb. It's really a bomb. It's a moving average crossover, and it just guides you, prevent you from entering trade, especially when the market is not, the trend is not strong. Okay. Okay, so let's see. Any questions? If there's no questions, we can just quickly take a look at the market for the week. Any question? Any question, guys? Any question? It's a very simple, direct system. Very simple, direct system. So let's take a look at the market for the week. Then, if you like right now, if you have let's say you are using MT5 doesn't have most of what you can see a beauty right on this MT5 demo account. So the same thing, no, the same thing that I just show you is right there. So let's take a look at the markets for the, anybody with any peers in mind that you want us to take a look at. Any currency pairs that you want us to take a look at? Let's see.
Gold, sir.
Gold?
Yes, sir.
Okay, gold. What again?
GBPJPY, sir.
GBPJPY. Okay, which one other one? Which other one? Okay, I'm going to add NASDAQ. Let's add GBP, NZD. Okay, now before we actually do that, let's take a look at the market for next week. Let's look at the calendar for next week. So that will kind of give you also ideas of which pairs we should look at. So here, so we have this week. So this will be next week now from here. That will be, so when you hear me say this week, just know that I'm talking about next week now. So apply settings. So this will be Monday. That will be 17th, Sunday. Okay. Monday, that will be New Zealand. Okay. New Zealand. So this will be in the evening. Asian market. Tuesday, nothing. Wednesday, there's going to be CPI that has to do with the Canadian dollars. Wednesday also 5:45 p.m. New Zealand dollars. So that will be then on the Thursday, Bank of England governor speaks. So that will definitely move for GBP crosses 11:30 a.m. Now because I'm in dollars, so this is my time frame. So you set this to your own time. So the same thing that Thursday USD. So expect a volatility like a GBP USD this day. Then Friday, if you trade London markets, so euro crosses, get ready for that. And of course, on Friday also, Bank of England, the governor speaks again in the morning, 9:30. So now let's see the, even though that will not give us a perfect currency strength, that will not give us perfect because number one, this is a weekend. But for now, the weakest currency is JPY, and the strongest is gold, USD, Canadian dollars. Okay, as you can see, USD not that like strong, but any courses like JPY courses. So like when you look into AUDJPY, and I think this makes sense why JPY is weak like this. It's because of the COVID in China and other things going on over there. So AUDJPY, GBP, JPY, what again? CAD, JPY, USD, JPY. So I will still be looking for these pairs to go bullish next week. That might be a retest, but like a pullback, then continuation. So that would be then Swiss franc also. You can see. So like AUDCHF, GBP CAD CHF, USD CHF. I will expect them also to be up. Why? Because we buy the weak, we sell the weak, we buy the strong. Except anything changes from any of the news release that we just look into. So now let's go to our chart. So let's quickly add gold. Gold will come from Merta. That's I believe that is the one right there. Yes, that's gold. So I'm going to put it on 4 hours. Can lower it down right there. Okay, so the next one is GBP JPY courses. GBP I will do AUDJPY also. AUDJPY, GBP, NZDJPY. Will do. So this is how you create a profile for some of you that were asking that question. Okay, GBP, NZD. I just add that because I have a pair going on there. So do we have NASDAQ already? Okay. Okay. So let's change all of them. When I'm looking to the week, you do top-down analysis. Sometimes I start from weekly, sometimes I start for 4 hours. That's where I look at the week. So GBP/NZD, 4 hours also. And if you want to really see the bigger picture, you can start looking. Let's start from the gold now. Let's see weekly. Let's see what's going on week. So this is gold. So you can see from here, we'll come back right there, touch that, then you see this pin bar. So indirectly, I will still be looking forward for gold to pull down. Like this is on weekly anyway. This is on weekly. So before that move, where did we break? Okay, we broke through this area. Okay, in this case, we broke through here, up like that, then broke through here. So I won't be surprised if you pull back to this area, we test before you start looking for, okay, take like right there. So I'm not going to be buying. I don't trade gold that much myself, but I will be looking forward for it to pull back down here. So then look for a buying opportunity either from here with tight stop loss or here. Okay, so that's what I will be looking forward to do. Now let's add our new system that we just talked about today. So right there, so you can see. So from here, right now, you can see that pretty much we will not be doing anything. So we have to wait. This is on daily. So you go to 4 hours. So on 4 hours right here, it's asking you to buy. But remember, this was on a Friday. So you have to wait on Monday to see what is going on. Possibly, I won't be surprised if it comes to this place, come back to retest. Now, when you now see that buying signal, then you can now buy. As long as we are uptrend, because this is 100 EMA, this is 50 EMA. So we are, our signal moving averages are 5 and 10. So that is what is bullish. There's no doubt about it. But before you go long on the, you have to wait for that pullback, especially because of that strong pin bar that we see. See how it formed on that zone right there. So you have to be very, very careful. Okay, so let's take a look at which other one. AUDJPY, we've just talked about it. JPY is weak. JPY is weak. I'm still adding that. JPY is weak. So if I'm going to be buying Aussie JPY, I will wait. The trend is up. There's no doubt about it. But then expect pullback. Okay, expect pullback. It could pull back. Then when you now have a buy signal like this, then you can now, congratulations, you can now go long. And I'll be looking forward, if I'm trading that. Let's take a look. You see right there, we've gone. I'll be very careful anyway to buy any USDJPY or ZDJPY to just go long. Why? Because of this move. The same thing on USDJPY. If you go to daily, you zoom out, you see this is a parabolic move. So if this is going to crash, it will be brutal. I won't be surprised if you have this, boom, 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 like that. So be very, 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 very careful in all those trades. Down, the same thing, NZD. Because the reason is simple. JPY is way, way oversold. And it will have a pullback any moment from now. So you want to be very careful. The same thing is this. You can see right there. So it breaks this. It breaks that area. So it will come back to retest that area, then look for buying opportunity right there. You can see right there. And if you still add, if you add our EasyPC, I just decided to use that today, since that's what we discussed. So you can see I won't be buying right now. Look at this rejection right there. So you wait. See, this is the beauty of it. It tells you, hey, wait. This is a yellow signal right here. Just wait. So once you have a very good signal, then you can go long. Okay. Now GBP SDD, UPNZD. I mean, this is oh my God, clean trend. Go up, come back down. Now we are fighting around this area. If it breaks through that side, we test it, then it might be on its way also back up. So that is just how I could just analyze that. Now let's add this to it. Boom, that is it. So give us that also. You can see. So you won't be buying. Why you will not be buying? Because it doesn't congruent. You see right there. Doesn't congruent. So you wait till you have a clean lineup like this. A clean lineup like this. Then you buy. Okay. I guess that is it. And once again, I want to wish all of you happy Easter celebration and enjoy the rest of your Easter. And if you have any question, please don't hesitate to message me. Keep the room, the group active. I will look into my schedule, especially for some of us that are new, to see if we can, if you have any questions, any of the system, back up. I want to make sure that all of you are good before we start getting new students also on board. Okay? Thank you so much. Happy Easter.
Thank you,
I wish you guys
very much,
successful celebration.
Apostle, when will we have the recording?
It depends. Right now, I have a program this evening, so I know it's not going to be too late tonight, but I will make it available.
Yeah, after the chicken tomorrow.
Okay.
Sir, can you put the link for the ECPC in the
group?
In the group, sir.
Okay, I will do that.
Thank you, sir.
Thank you, Apostle. God bless you.
Amen.
God bless you. Thank you, sir.
Amen.
Thank you very much, sir.
Thank you.
God bless you.
Thank you. Thank you.
Bye, sir.
God bless you, man.